Hello, Accounting 203 students. This is Professor Hassey. This is our week 4 lecture video. Today's date is Tuesday, June 27th. And because of the upcoming 4th of July weekend, I wanted to keep our work as far as assessed work or graded work fairly light this weekend, so you don't have to, if any of you have plans for the 4th of July, not to curtail those too much because of accounting work. So we're not going to have an assignment this week. The assignment will be posted next week on Monday and then due July 9th. The only work you have to do this week is to review problem 4-1A, which is the subject of our lecture video today, and it's a combination of the closing of the accounting cycle. And I would like you to begin review and what you need to do for your project paper. And we'll talk about that in just a few minutes. Your sole task this week, as far as a graded assignment is concerned, is to select a company to do your project paper on. And that has to be a publicly traded company. And I'll talk more about that in a few minutes. So that's our schedule for this week, number 4. So here's where we stand currently in our Blackboard. If you go to the course information tab, you'll see our schedule. We've already completed discussions 1, assignment 1, and assignment 2, and I will post assignment 2 grades tomorrow, Wednesday. I'm in the process of reviewing that work now. This week you have a discussion 2, which is a selection of your company for the project paper, which is 5% of your course grade. That is due on Sunday, July 2nd. Not too much graded work for this 4th of July weekend. Then assignment number 3, which will be on completing the accounting cycle and retail. And that will be posted this coming week and due a week from Sunday. So that's where we stand currently in our class. The project paper has now been posted with an overview of the paper, which gives you what I'm going to be doing. You're going to be selecting a company, then you're going to be looking for their 10K filing. The 10K is a mandatory requirement of all publicly owned corporations to file their financial statements on an annual basis. They also do it quarterly, but the 10K is the financial statements for the fiscal year of the company. You are to locate that 10K for your company and then answer a series of questions in your paper from that information in the 10K, and that's your paper. I've given you a sample paper so you can see the format. And also I've given you a link to a video which explains where you can get the 10K for your company, which is in the D&B Hoover's database in the Wilson Library. You can go to this database and the 10K for every public corporation is in there. You look up your company and locate the 10K, then download it. And don't print it out, because it's probably a 200+ page document, but you can download it to your computer and then look up the information that you need to find for your project paper. If you're having difficulty in the next few weeks finding your company 10K, just let me know and I will help you get it. I've also given a sample of a 10K, what it looks like. In this case, it's for Ford Motor Company. And here are those samples. Here's the project overview, which is given to you. The due date of this paper is the last day of class, Sunday, July 30th. Now remember also on Sunday, July 30th, you'll have your final examination due as well. So it's best to begin to be working on this in segments over the next few weeks so you can get it out of the way. This is a paper that requires you to answer a series of questions, and here are those questions. And they're all located in the 10K report. 2 purposes of this. Number 1, to get to know as a business student what a 10K is. That's one of the most important documents in accounting and finance for a public corporation. It's good for you as a student to understand what that is, get the experience of going in and looking for accounting information for that company in the 10K, and then presenting it into a APA formatted paper. Speaking of the paper, here's a sample that I've given you on what a 10K APA format paper is. Title page, the abstract, which explains what you're doing, and then the background information or the segments of what you're finding out about each company from the 10K. Notice all the questions are located there. The key thing in this paper as you've answered these questions is to state where you found it in the 10K. That's a key point. If you don't do that, you'll get many points taken out. In other words, from the 10K in this example for Costco, they found that information on page 2 of the 10K, on page 3 of the 10K, and so on. Every question answered has a source of where that came in the 10K. You need to provide that source in your paper. So please take a look at this sample. Here is a sample of a 10K for the Ford Motor Company. This is what everyone looks like. It's a preset document, set template by the Securities and Exchange Commission, and it's a 10K, which is an annual report for a company. And in this, it tells you everything you wanted to know about the business. And every publicly corporation in America has to file this statement. So you're going to be working on this in your project paper. So again, there's the sample of a 10K. Here's the sample of a APA formatted paper. And here's the project overview of what you need to do. Your first thing on your task is this week's task is to go in and find a company that you'd like to work on. Might be the company you work for, might be a company you're interested in, maybe a company you own stock in, but it has to be publicly traded. And by this Sunday, July 2nd, I need you to go to the student discussion forum, and there you'll see week number 4, project paper company selection. Each student will prepare a paper of written answers to the questions in the project overview provided by your company selected 10K filing as of December 31, 2022, or the most recent completed fiscal year. Please select a company you would like to review their 10K filing and answer the paper questions. See project overview file. Your company must be publicly owned. The firm has a public ownership of its stock. Create a discussion forum this week in your name, select a company, and in one paragraph, explain why you selected this company. Please submit this by July 2nd. So you don't have to do the paper this week. You just got to select the company. Once you select the company, then we'll go out and try to find the 10K for that company. And then you can begin to put together the questions, answers for the paper. But the first task is this week, post the company that you are selecting and explain in one paragraph why you selected it. So that's our assessed work for this week. Company discussion week number 4, select a company for your project paper. And here is week number 4, where we're now completing the accounting cycle. We're now going to be completing in the assignment number 2, you posted adjusting entries, you posted to the general ledger, you prepared financial statements, and you did the trial balance and all that. So now you're going to be doing closing entries, adjusting entries, and closing out the accounting cycle. Here's the explanation here in your Blackboard. And then we'll be doing a problem, beginning it today in our lecture video and completing it in Friday's video, problem 4.1a in your textbook. Here's that problem. Here's the worksheet of that problem in Excel format. You'll be doing fairly much the same in your assignment 3 work that's posted next week and due July 9th. You'll be completing the accounting cycle in assignment number 3. This is the problem that I would like you to concentrate, and this will be put into the Blackboard in our in-class review for this week 4 class 3, and you can download it. And if you don't have a text, and you can follow along, and this is a great sample problem. As remember what I said in the week 3 video, that make sure you look at the end of every chapter in the summary, or what they call, the textbook calls a cheat sheet, is a great way to reviewing the material talked about in that chapter and reviewing problems. But here's a problem we're going to do today. In other words, we're doing it right from the beginning. where we're going to prepare the journal entries, the original journal entries of the company. Then what we're going to do, we're going to post those to a ledger and prepare a trial balance. Then we're going to do these 1, 2, 3, 4, 5 adjusting entries. Then we're going to prepare another adjusted trial balance. And then we're going to prepare the income statement and the statement of owner's equity and the balance sheet based on that adjusted trial balance. Then we're going to prepare the journal entries to close the books and prepare a post-closing trial balance. This problem is basically the first half of our class to be able to do it. You're practicing it in quiz number 2, and then you're going to do it again in the midterm examination to make sure you got it. The difference between quizzes 1 and 2 and the midterm is in the midterm, you're going to have no pre-formatted spreadsheet. You're on your own to do that. Now you actually can use the spreadsheets from the prior problems, even this one, and just insert the information in there. You can set that up, but I'm not giving you a pre-formatted spreadsheet. The original entries to set up the company April 1 through April 30th. Let's take a look at that. And let me just get out of this just for a minute and show you where we are. If you go to week 4, accounting cycle, so here are the original entries for adventure travel, and I've already done them, and you can walk through this and make sure, but so far so good. We all did pretty well on the quiz number 1 journal entries, but note the format that I have here. There's no pennies, there's no cents, number 1. Number 2, the debit entries are always on top and the credit entries are always below. Makes it just easier to read. So the company invested $50,000, or the owner invested $50,000 in capital. $30,000 was cash and $20,000 was computer equipment. Debit the assets and credit the equity capital account. Then they paid rent expense for the month of April. $1,800 of cash went out, $1,800 rent expense. Then they purchased office supplies. $1,000 went out of cash, credit, and they purchased the office supplies, which is an asset account of $1,000. Then they went ahead and paid insurance in advance. $2,400 cash was paid, check. And they put that into the prepaid asset account, prepaid insurance, $2,400 asset. Then they paid salaries, $1,600 wages or salary expense, debit, expenses debited, $1,600. Then they earned their first revenue of the month of April. Somebody paid them $8,000 for commissions earned, credit, revenue, and debit cash, they paid them in cash. Then we have another wage expense or salary expense of $1,600. Cash is being paid. Then on the 29th, they had some repairs expense. Notice there's no accounts payable here. They're paying everything in cash. Credit cash $350, debit repairs expense $350. Then they have paid their telephone bill. Wrote a check for $750, credit cash, telephone expense $750. And then the owner from Adventure Travel took out $1,500 of cash, and we're calling that owner withdrawal. Why is it not an expense? Because it's the ownership taking the money out of the company. The $1,500 has nothing to do with operations or creating revenue of the business. So once we do all those entries to set up the company, then if you notice over here, I set up a general ledgers with debit columns and credit columns, and I'm posting all the cash transactions, the capital transactions, the rent expense, the computer equipment, all those expenses and assets are being booked. Notice also, you don't see some here like accumulated depreciation. That's an adjusting entry that I posted. But here I set up a ledger and post all these to the ledger. And then we get to the second part of our problem. We need to do a trial balance. So after we do this entry, these entries for April, post them to the ledger, and then we get this trial balance. Notice the trial balance. It either has a debit balance or a credit balance. Can't be both, because that's, you want to show the account balance. Notice cash here. Here's cash coming in, cash going out. There's the ending balance. See, 27,000 debit, 27,000 debit on the trial balance. No credits. It's either a debit or a credit balance, or if there's nothing, there's no balance. So notice I take all the debit balances, list them here, of which assets, rent expense, withdrawals, and all the credit balances here, which are revenue and capital, the owner investment. And golly, they match. So through the first part of this exercise, I'm in balance, $58,000. This is not a financial statement. It's just telling me that all my entries are balancing out through this point of time in April. Then the next part of this problem is we have to do the adjusting entries. And here they are right here. Use the following information to journalize and post adjusting entries for the month of April. So they give you 5 adjusting entries, and you are now to record those adjusting entries based on the information that you have accumulated in your trial balance that you just did. So I now have to do 5 adjusting entries based on this information and the balances in the accounts that exist. Remember, adjusting entries are adjustments to already existing accounts that have occurred at the end of a month or the end of a cycle that you have to adjust the accounts for certain activities. We talked about that in week's 3 video. So let's see what these adjusting entries are. One is a prepaid insurance of $133 has expired. Well, what would that be, an adjusting entry? Here are the adjusting entries here. $133 expired prepaid insurance, meaning we've used up $133. Debit insurance expense, credit prepaid insurance. That's an adjusting entry. We've now adjusted the prepaid account with insurance now being used. So if I go to my ledger, notice my prepaid insurance, there's when we're paying the prepaid insurance in advance. And now at the end of April, we're adjusting it for $133 credit to bring the new balance in the prepaid of $22.67. That's the balance that appears on the adjusted trial balance and will appear on the financial statements in the balance sheet. And then notice over here in insurance expense, we have $133 as a debit, which will be the insurance expense amount on the income statement. See how that all works? The next journal entry or adjusting entry. B, at the end of the month, $600 of office supplies are still available. $600 of office supplies are still available. Boy, they're not making this any easy to figure this stuff out. Well, if I go back to my original unadjusted trial balance, if you notice, remember one of our first entries during the month of April was that we purchased office supplies of $1,000 with cash. Now they're telling us in the adjusting entry that $600 is still unused or available, meaning we haven't used them. Well, if we purchased $1,000 of supplies and we have 600 still left, that means we must have used 400. Debit supplies expense, credit supplies. We've used $400 because they say we purchased 1,000. Now the adjustment entry is that, well, we took an inventory and we have 600 still on their shelf. Well, that means you must have used $400, and that's an expense. And then I post that to the ledger under supplies here, $400 credit. And now the balance in the supplies account matches that comment or that statement of supplies available at the end of April. See how that adjustments works? The use of prepaid, the use of supplies, two different examples of adjusting entries. Then we go to the next or third adjusting entry, letter C. This month's depreciation on the computer equipment is $500. Now remember, depreciation is allowed by companies to expense a fixed asset over time. Why do they allow us to do this? To do that, it's the Internal Revenue Service. They let us expense assets over time. And what does that do? Well, it lowers the value of the asset as long as you own it, because it means it's depreciating in value. You're using it. And also the $500 is now an expense on your books, and it gives you a reduction in your tax liability. It's an expense. It's like a business expense. It reduces the amount of profits you make, thus you pay less taxes. That's what depreciation expense is. So in letter C, depreciation is $500. So we go to our entry. For letter C, and there it is. Debit depreciation expense and credit accumulated depreciation on that equipment. And notice we have computer equipment valued at $20,000. That's what the value of when it was set up when the owner started the business. Now we have $500 credit accumulating. This account will continue going forward every year, showing what we've depreciated up to this point in time. Notice we do not touch this account. That stays the same. We put the credit of accumulated depreciation in a new account as a credit balance, $500. And over here is the depreciation expense of a debit of $500. The adjusting entry to record the use of fixed assets, depreciation. Then we go to the fourth adjusting entry. Letter D. The employees earned $420 of unpaid and unrecorded salaries at the end of the month. So at the end of the month of April, the employees worked and they made $400, $420. But that's not going to be probably paid until the first week of May. But at the end of April, it's still an expense. This is an example of the adjusting entry called an accrual, the recording of an expense before it's been paid, properly recording it in April when the employees worked. So we do an adjusting entry to record the expense being incurred and the liability being incurred. Debit salary expense, $420, and credit salaries payable. So at the end of April, we've now have a liability. We know we have to pay $420 of this payroll, of this salary expense, but it's probably not going to be paid until May, a new accounting period. So at the end of April, it's a liability. And we're showing the expense in the proper period that that expense was provided and worked. Accrued expense example of an adjusting entry. Now the last adjusting entry. This is a great problem. You guys should really look at this because this will help you both in the quiz and the midterm. E, the company earned $750 of commissions that are not yet billed at month end. So we have provided a service and earned some commissions of $1,500 or $1,750. Now I see here, I have a text message from Cheyenne. Why is she sending me a text message when I see that she's online?
Yeah,
We're going to record now an accrual of revenue. Revenue has been earned, but it's not going to be paid yet until probably the next month. We have to bill it. And here's that adjusting entry. Debit accounts receivable. The money is owed us $1,750. And credit commissions earned $1,750. We've earned the money. We've provided the service. It just means we haven't been paid yet, but it's still revenue. So that receivable is now on our books as an asset account. There it is on our general ledger. And now we will have revenue of commissions earned of $1,750 based on that entry at the end of the month. Even though we did not receive cash, we provided the service. We did it. So the asset is a receivable, not cash, but it's still revenue. It is still revenue. So there are the 5 adjusting entries for problem 4.1a. You have to do adjusting entries in quiz number 2 this next week. Then, after I did those adjusting entries, you can't forget to go back and make sure you post them to the proper accounts in your ledger. Here's that example right here. And then when you get all those those 5 entries posted, then you can do the adjusted trial balance. Remember, our unadjusted trial balance was right here, based on the original entries of April, 58,000, 58,000. Then we now have a $60,670 adjusted trial balance with all the adjustments now being made and posted. And notice I've taken those balances and put the debit balances in the debit columns. I put the credit balances in the credit columns. And golly Gomer, I must be a genius. $60,670 debits, $60,670 credits. I now can complete my financial statements. I now can produce my financial statements because my adjusted trial balance is balanced. And now this is why I have this in yellow. These are all the revenue and expense accounts, except for salaries payable, excuse me. Get that out of there. That's not right, Mr. Hassey. I have in yellow all the revenue and expense accounts. And now here's the nice, neat, and concise income statement that tells me I earned $9,750 in revenue for the period ended April 30th. That's important. You got to tell me what's the statement and what's the period for. If you leave that out, you might as well just lose all the problem because it's not right. And then I list all the expenses, and they total $7,553. And now I know that in the month of April, after the books and the entries are done, this company made a profit of $2,197. Cool. We made money. That's the income statement taken right off the adjusted trial balance numbers. But now this is a nice, pretty little neat statement. If you gave somebody this, an investor, or you gave somebody who doesn't know your company this and say, yeah, here's my adjusted trial balance. Well, it doesn't tell me how much money you made. It doesn't tell me anything. It just tells me balances. Oh, okay. Well, here's a nice, neat financial statement that tells you I made $2,197. Okay, now I know what you did. Thank you. That's one of the intricacies of accounting. You have to do the gut work, the entries, the postings, the adjustments, and then show them to the public in a way that they understand what happened. What happened? We made $2,197. And then you take that balance and prepare the statement of owner's equity, which shows how much does the owner have invested in this company. Well, remember, during the month of April, they invested $50,000. That original entry up here that we posted to capital, they invested cash and computer equipment of $50,000. Okay. So the owner has $50,000 there. And then we just determined that they made a profit of $2,197. The owner gets to keep that. And then we also know that the owner withdrew $1,500 during the course of the period. Here it is right here. Owner withdrawal, 1,500. Notice this is not in the income statement though. It's not an expense. It's an owner withdrawal, and it's reducing the equity balance by 1,500. So now we know that the owner has $50,697 of invested capital in this company. Their investment originally, the profits they made in April, and the money they took out of the business in April. Now this balance now goes to the balance sheet right here, equity. There it is, $50,697. And then we go back to the adjusted trial balance and get the asset accounts. And there's no liability accounts. Aren't we lucky? No liabilities. So here's the balance sheet as of April 30th. Their assets, cash, computer equipment less depreciation, supplies, the balance in prepaid insurance, the receivable, 51, oh, there is a liability, I'm sorry, 51,117. And we go back to the trial balance and wait a minute, there's the salary payable, excuse me. Remember that salary accrual entry at the end of the month? We owe $420 in salaries. Well, there it is right there, the liability, salaries payable. Plus the owner's balance that we determined in the statement of owner's equity, add the two together, $51,117 of liability and equity equals $51,117 of assets. So now we have prepared how much money did we make? What's the owner's position of the company? And what's the balance sheet of assets, debt, and equity at the end of April? And we show those to bankers, we show those to our customers, we show it to ourselves. It tells us in a nice, concise, and organized format what happened with all these journal entries and postings we did during the month of April. People do this for a living. That's what's scary. And right now, tomorrow is July 1st. Guess what? Okay, there is problems 4-1 and up to the financial statements. And we'll complete the second half of this problem 4-1 on Friday in our weekend update video, the closing entries. Remember, all the temporary accounts are closed at the end of every cycle, every month. What's a temporary account? Revenue accounts, expense accounts, and withdrawal accounts. Why? Because in the next cycle, you want to see what your revenue was, what your expense were with your withdrawals. All the asset or balance sheet accounts carry forward from one accounting period to the next, but you close out revenue, expense, and withdrawal accounts, and that's what we'll work on Friday. Now, I keep making references in this video that you just saw for problem 4-1. Remember, this video was done in a prior class and a prior platform. So naturally, the vernacular is a little bit different. You do not have a midterm. You have assignment 3, which will be like a midterm if you could compare that to this video. So everything, the material is exactly the same. It's just the assessment's a little bit different. So I apologize for that, but I wanted to use that video because it's a good one. And here's the problem 4-1 in your week 4 Blackboard file. There's the problem, the PDF of the problem that I referred to in the video. And here's that spreadsheet of the answers to walk you through the process of the accounting cycle for this company, Adventure Travel. You will have a problem very similar to this in assignment 3 next week. Okay, so that's a good, what I suggest if you have time this week is walk through that problem 4-1. Yeah, do it on your own and then go back and look at those answers and look at that spreadsheet that I did and see if you were able to do that. That's a great study for completing the accounting cycle. So that's what we're doing. So that's The problem we're reviewing this week will set us up. This will be completing this week the last first half of our class, week 4, and the financial accounting. Next week, we start retail accounting and accounting controls and managerial accounting in the second half of our course. But this will close out our financial accounting for this course with assignment 3 next week. And problem 4.1 is a great practice and a review problem for this first half of the class. So you have the company selection for your paper, project paper this week, due on Sunday, July 2nd. You have a review problem of 4-1 to get to know the whole accounting cycle in one problem. You'll be assessed that next week in assignment number 3. Look for assignment number 2 review in my weekend update video this Friday. I will post the grades tomorrow, Wednesday, June 28th, so you can review. Besides that, we're all in pretty good shape. If anybody has any issues or questions or concerns, remember my student hours are available this coming Thursday night, June 28th, June 29th from 6 to 8 p.m. via Zoom. Please feel free to come on and ask me any questions or post them to the discussion forum or send me an email. So we're off and running to our final week of the accounting cycle. Have a great week. Look over that project paper material, select the company, and we'll onward and upward with a review of a 10K financial report. Have a great week, everybody. We'll see you this weekend. Adios.